Hey, Darius, you raised your own your own guidance that you had given for the full year. But if you look at it, it was really a reflection of the numbers that you beat by in the third quarter. For the fourth quarter, basically, it means you're going to come in with what the street's anticipating for the full year. I guess that is no small feat when you're talking about such a crazy economic environment and uncertainty about the future. But are you being cautious in any way? Are there areas, as you said, some places where you see softness, and are you conservative as a result?
Well, we try to be balanced in our outlook. I think, one of the things that probably goes unsaid is, as you look at our original outlook for the year that we laid out in late January, early February, one of the things we didn't anticipate is $1.1 billion in headwinds just between FX and Russia alone. I mean, just those two items cost us close to 30 cents in EPS. Yet what we're projecting is at the very upper end of our original range for the guidance. So I think, the way I look at it, we're actually substantially above our original guidance range. And granted, our Q4 initially was a bit high. Mm-hmm. Some of the analysts and so on point out that we have a very aggressive Q4. We feel good about it. It's a balanced view on Q4. But I think that the team and our future shapers across Honeywell have done just a tremendous job in overcoming all the headwinds that we've seen this year. And to deliver near the upper end of our guidance, I think is a real accomplishment. And I'm proud of the team.
How did they do it? Was this just cuts in other areas to try and make sure the margins were preserved, or were there stronger sales?
Yeah, I mean, commercial excellence, positioning innovation that matters, driving in areas that are still active. The North America side of the business was terrific for us. We were hurt a little bit in Q3 by some of the, lockdowns in China, particularly in the area of aviation. So the team has been very agile to pursue areas and segments that are still very active, driving commercial excellence, bringing innovation in areas that customers still care about. And that's really what Honeywell has been about. It's a company of innovation that always tries to stay one step ahead. And it's really produced. And then operationally, we're really on the tips of our toes in terms of trying to manage the very, very difficult, particularly supply chain environment that we've seen all year.
So January, when you laid out your guidance last year, I mean, that's 2 months away. You're getting close, and there are even more uncertainties this time around. What are you thinking in terms of how you plan for next year? Where do you put Forex? Where do you put issues like central banks and rising interest rates? How do you figure all of that out to come up with the best possible planning you can and best guidance you can for the full year?
Well, as you correctly point out, it is a very dynamic environment, and luckily I'm going to take the full, 2.5 months to really dial that in. But I'm optimistic. I'm optimistic about our aerospace business. I'm optimistic about our performance materials and technologies business, which is energy driven. Unquestionably, those two segments are going to do well. We're still sitting on record backlog, so if we see any softness, we've got backlog we can go to. Our building technologies should grow, certainly not at the level it's growing in 2020 this year, but we still expect moderate growth. Our SPS business, which contains warehouse automation, that will be down. I mean, we've grown that business around 50% the last couple of years, and frankly, some of that capacity in the marketplace has to get absorbed. But we'll expand margins there. So I'm cautiously optimistic about 2023. But there's certainly going to be soft spots, and frankly, we've already taken some actions to prepare some of our businesses for a potential economic downturn. So I don't think 23 is going to be a disaster, although I don't think it's going to be as robust as 22 is.
What type of measures are you taking to prepare for that downturn?
Certainly, from a cost side, just making sure that we're right-sizing the business, taking a look at our indirect spend, making certain that we have our volumes around with our indirect investments. That's something that's been part of the Honeywell playbook for a long time. And frankly, we like to act way before we even see some of the markets actually turn. Mm-hmm. So we've been in that kind of a mode. Nothing dramatic, nothing draconian, but even since Q3, we've been looking at this.
Shepard Smith here. Thanks for watching CNBC on YouTube.